Well, those are the headlines, and let's now kickstart the Money Show. Just to give you a sneak peek into what I was talking to you earlier before the headlines, and that's the AMFI data. There's one particular mutual fund category that for the last 4, 5, 6 odd months, in fact, has been seeing continuously higher inflows than all the other equity categories. Well, the fund category that I'm talking about is sectoral or thematic funds. These essentially are funds that invest only in a particular sector. Just to give our viewers an example, an oil and gas fund will invest only in stocks like a Reliance Industries or an ONGC or an HPCL. Similarly, an FMCG fund will invest only in Britannia, HUL, Dabur, so on and so forth. But interestingly, while the whole point of mutual funds is diversification, these sectoral funds don't seem to exactly be doing that, though mind you, within the sector, of course, they are well spread out. So why is it that investors seem to be flocking to this category so much? And is it the right investment instrument for retail investors? To talk about this, I have with me Harshad Chetanwala, who is the co-founder of mywealthgrowth.com. Harshad, thanks so much for joining us today on the Money Show. To start with, Harshad, what exactly is it about thematic funds that's pulling investors to such a large extent?
No. So we have to understand that what are these thematic funds. I think you rightly introduced them saying that, these are funds which focus on particular industries or particular sector. Now, sectorial funds are basically, let's say, if in case there is a sectoral fund, a thematic fund is sort of is a multiple sectors which is linked to a particular theme. But at the end of the day, they both are very similar in nature. So one is when you look at a sectoral or a thematic fund, the investments will happen in an industry or sectors pertaining to that particular theme. One should keep in mind that there are different themes that appear to have potential during different time frame. Okay, so like last year, and of course, one of the data points that you were sharing that in the last 6 months, there have been a lot of inflows which has come into sectoral funds. Okay, I think healthcare is where a lot of investors have invested into, because a lot of companies also came up with the healthcare fund. Okay, now if you see that, these are sectoral funds and these sectoral funds will keep on having these seasons. Okay, sometimes it will be infrastructure, sometimes it will be consumption, energy, healthcare. So that's how it goes. Okay. I think the important point that investors need to keep in mind at the time of investing into a thematic or a sectoral fund is the valuation. Okay. If you go back 2 years ago, the healthcare was not doing that well. That sector itself was not doing that well. If you see last 1 year, there were a lot of opportunities where a lot of investors thought that because of COVID, the healthcare sector will do well, and that's where they started investing into sectoral funds focusing on healthcare or overall theme which is focusing on health. Overall, I think it is better for investors to have investments into equity diversified fund instead of focusing only on a sectoral fund or a thematic fund.
Harshad, I suppose the reason why we are seeing a lot of this interest in thematic funds is also because, you look at some of the top performing themes in the last, maybe 5 years or 10 years. One category that will always feature will be one of those thematic funds. It could be maybe if you'll take 10 years, it probably will be the consumption space. If you'll take maybe the last 3 years, it will probably be IT. So there's always, some or the other thematic fund that always features on top of the list. So wouldn't that really be a tempting proposition? Or do you think that's just a false lure of sorts for retail investors?
I think you used the word right, which is tempting. Okay, because these thematic funds or sectoral funds have the habit of going through cycles. So these are very much cyclical in nature. Okay. And a lot depends on which theme is working at one particular point of time. Okay. We all know that most of the themes go through these cycles, and that's where there's a lack of consistency. When you talk about equity investments, the investments are for long-term in nature. Ideally, anyone who get into equity would like to hold it for 5 years, 10 years, 15 years. Now, if in case these thematic funds go through a cycle of 3 to 4 years, it also is probably against the nature of equity investments, and it's very difficult to time in equities. Okay. So it's always better to give more time to equity investments rather than timing the market. And if in case we talk about return perspective, let's say 1 year is like, is a very short term. But if in case we look at 1 year, the thematic funds or sectoral funds itself, there is a range from 40% to 100% is the return what these funds have given across last 1 year. So the performance of thematic funds or sectoral funds is very subjective in nature. And if in case we look at it from a general perspective and generalize that thematic funds have generated 100% return, maybe not the right way to look at it, because it does carry its own risk when it comes to investing into thematic funds or sectoral funds in that way.
So what, I mean, how risky are they really then, Harshad, if I have to compare it to maybe a large cap fund or a small cap fund, what exactly are the risks that these thematic funds carry?
Sure. So I think one of the points that we already covered, that their cyclical nature is one of the biggest risk that the fund carries. Unlike an equity diversified fund where the investments happen in multiple sectors, in a thematic fund or a sectoral fund, you are only focused on one particular sector or few sectors if in case it's a thematic fund. Also, you have to remember that these funds have a clear mandate. These thematic funds or sectoral funds have a clear mandate that irrespective of market conditions, I have to remain invested into these companies or these industries. Now, which is not there in an open-ended or an equity diversified fund, because there the fund manager can move into different sectors depending on what they find more attractive, which is not there when it comes to thematic or sectoral funds. That's another risk. Also, at the same time, the funds will probably be more volatile compared to the other diversified fund, okay, because the portfolio is more concentrated. So that's another risk. Okay. So overall cyclical nature, being you're bound to invest into that particular industry, sector, or theme throughout the time, irrespective the times are good or bad, and more concentrated portfolio is something where the risk increases for the layman investor.
Also, I would imagine that, let's say, if you have a basket of mutual funds, you'll have some large caps, you'll have mid caps, you'll have small cap mutual funds. Now, these usually will have exposure to, the most common names like maybe NEHUL, Reliance Industries, HDFC Bank, etc. And then let's say if I'm adding on a thematic fund as well, like a banking and financial services fund or an oil and gas fund. Do you think that there exists that risk of overexposure in a way also to the same kind of stocks? And do you think that also happens then when I'm owning too many funds at the same time in my portfolio?
Right. So, there will always be some overlap when it comes to investing into equities through mutual funds. Now, what happens with, let's say, if in case I start investing into a diversified, if in case my portfolio is like across maybe 5 or 6 funds, and then I add an element of a thematic fund. Okay. So let's say like I start investing into a thematic fund which focuses on banking. Now, if you see most of the equity diversified fund, their allocation towards financial services is much more higher always. What does this thematic fund does is also adds an element of additional allocation to that sector. Okay. Now, it is all possible that when I as an investor, I'm trying to build my portfolio, it is always better to construct a portfolio which has around 6 to 8 funds or maximum 10 funds in the overall portfolio. And if my risk appetite is a bit more higher, then I may like to add an allocation of maybe around 5 to 10% in these thematic or sectoral funds, where I would say that it is only meant for investors who have higher risk profile. Okay, or who have an appetite where they can take more risk. If in case I'm at an initial stage of my investments, I am just new into mutual funds, I am better off with the open-ended equity diversified fund rather than taking a bet on a thematic fund, sectoral fund, or for that matter, mid cap and small cap as well.
Okay, so if you're new to investing especially and you're still trying to, learn the ropes, avoid thematic funds because, it's the cyclical nature of it. Today it's the banking space that may perform, tomorrow it'll be oil and gas, day after tomorrow it could be pharma. So it's ever changing really, and it's very difficult to time the market. As, experienced traders and investors as well say that, don't bother timing the market. So obviously, if you are new, it's going to be difficult as well for you. If, let's say, somebody has good working knowledge of how a particular sector functions and they believe that, okay, you know what, I am confident that this sector is going to do well. Harshad, what is the max you would recommend putting in a sector like this, which does carry, like you said, cyclicality, higher risks, etc.?
I would say, maximum it can be around 5 to 10% of the overall portfolio, and that too for investors who have good enough knowledge or time to manage that portfolio or study that particular sector where they are parking this 5 to 10%. For new investors, of course, I would suggest not to venture into a thematic fund at the initial stage.
So a big no-no, like I said, for new investors to put their money into a thematic fund, start, or in fact, like Harshad said, it's better to even avoid mid caps and small caps because they too can be a little risky. And yeah, start off with, the known large cap names, and then slowly you can move on to, the mid caps, the small caps, and the more esoteric products that are available out there, like value funds, focused funds, flexi cap funds as well, which is a new category. So that's, of course, about thematic funds and, your guide as such on how you can go about investing in different mutual funds.